Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic evening so far. I'm looking forward to this webinar. This is one of my favorite webinars every week, so I'm really excited to host this. Kind of talk about the COT report. Last week we had a pretty good discussion on COT report. We also talked about my risk management technique that I use on the long-term signals and whenever I'm doing a swing trade that I'm scaling into. So I'm gonna talk a little bit more and expand on that today. We'll also discuss a little bit about the overnight trades and kind of have a discussion there. So hopefully all that's very helpful to you guys. If you have questions throughout the webinar, feel free to ask those questions in the chat box. If you have questions on the recording, feel free to ask those questions in the comment section down below. But yeah, let's go ahead and get started here. Before we jump into our discussion today, as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So perfect. So let's talk a little bit about the COT report and then we'll kind of build on that discussion. So as always, I just want to make sure that we go over the basics of what the COT report is, and so that everybody is on the same page. And then we can kind of expand into our discussion. I've had a couple of people reach out to me asking me to explain a little bit more in detail the crowded market indicator and how that works with the COT report, what we're looking to do that way. So let's jump into this. So first of all, let me explain just real briefly what the COT report is for those that are new. This won't take too long. So basically, the COT report stands for Commitment of Traders, and that's where COT comes from. And the CFTC is a financial regulatory authority here in the United States, and they regulate the commodities and futures market. And they publish every week the Commitment of Traders, which is this right here. And these are the reports. In fact, I'll just pull up a report right here. This is a COT report, and it comes out once a week, and it basically shows us how long or how short these big banks here in the United States are buying or selling different instruments. So right here you have, this is the first one is the Malaysian crude palm oil, right? Which we don't trade. But if you wanted to trade like the euro, right here, these are euro future contracts. So you can see how big the banks are when in terms of their buying and selling. So a lot of banks have an interest to buy euros right now, and they're subsequently selling fewer euros. Right. So this is where I go to get COT data as I come in here into the COT report. How do I get access to this? Let me actually rewind so you guys can see how I get to this each week. So when I'm on their homepage of the CFTC, I go over here to market data and economic analysis. Then I click on commitment of traders. And then from here, there's a lot of information you can read up on, but there's a lot of different COT reports. So there's not just one report. There's many for different sectors of the financial markets, right? You've got agriculture, petroleum, natural gas, electricity, metals. You've got these are more currencies in the financial futures report. These are legacy reports down here that have to do with different exchanges. We look at the CME mainly for our data. And this is where I go. So the most recent one will always be right here when you click on this every week. So you don't have to go searching for it. You just have to click on it and it'll give you the most recent one. Now you'll notice with these are dated every Tuesday. So basically these companies have to release their positions and report how big or small their position is to the CFTC every Tuesday, right? And then by Friday, the CFTC then releases it to the public. Now, they don't necessarily say how big a particular institution is, but they just take the conglomerate or the collective sum of all these institutions and just say, hey, this is what they have as a collective group. And this is what these guys have as a collective group, and so on, right? Now, why is this helpful or not helpful even? Why do we use the COT report data? So naturally, I'd say I'd love to trade more like an institution. A wise man once told me that the institutions will lead you to wealth, right? Because they're good at it, right? There's a reason why they stay in business. There's a reason why they do very well with what they do. And so I think it's smart to learn how to invest like they do and trade like they do, right? So we want to follow their movements. So we have a couple of different ways we use COT data. We use it for two things. We use it to analyze the shift in their movements week to week. And we also use it as an overall guiding point. So if we can see that their sum of positions is ultimately long on something, then we might seek a long position. If we can see that their sum of positions is overall short, then we might seek a short position, right? So that's usually what we're trying to do with the COT report. Now, a couple of things. So let's add on to that and let's further our discussion. So a couple of things you should know about these COT reports. So the COT report measures obviously the long and short positions and also measures a couple of other things by these institutions, but they classify them into different groups. So we have the non-commercials and then we have the commercials on the legacy reports. When you look at the financial futures report, there's leverage funds, you've got broker dealers, swap dealers, you've got non-reportables and a few others. Okay, so there's actually a lot of participants on those reports. The legacy reports makes it easy because it's just separated into two participants. You have non-commercials and commercials. Now, if you don't know your way around the COT report, you might just have this inclination to believe that commercials are the big guys and the non-commercials are the little guys, right? The verbiage seems to um, kind of allude to that, right? But the thing is, when you actually look at the data and you actually analyze the information that the CFTC will give you about who the non-commercials are and who the commercials are, it actually makes a lot more sense that non-commercials are your your institutions that you want to follow. So basically, when somebody has a lot of money and they want to trade on the CME, they have to register with the CFTC and they have to fill out an application. And in that application, they have to declare what type of institution they are, what kind of trader they are. And let me explain the differences real briefly between the two. So a non-commercial is basically a bank or institution that has the sole purpose of just using the market as a way to speculate for the purpose of making profits. Okay. That's a non-commercial. A commercial is a participant on the CME who comes to the marketplace not necessarily to make a profit, although that could be their goal. The main goal is to hedge against and offset securities and other practices and functions of their business. So, for example, a farmer in the Midwest who owns thousands of acres might want to hedge against their corn crop that's coming up or something like that. Maybe they want to hedge their what they're harvesting or something like that, or they want to offset certain losses or however they want to do it. They might use it as a tool to hedge. So it's not really this like way to make money. It's just a way to use the financial markets to stabilize their business. Okay, that's a commercial trader. That's an example. Another example would be like Coca-Cola or Walmart, who has businesses and bank accounts and brick and mortars all around the world, and they operate in different currencies globally. And so they might offset their inventory that's sitting around other places or their bank accounts in other places when inventory is traveling across the ocean. Sometimes they have to prepare for when it arrives and they'll offset losses through hedging, or if they anticipate like inflation or something like that, they have a full-blown forex and futures team that will take positions in the market to stabilize their business, right? So that's a commercial trader. Now, that's important to know because of what I'm going to say next. So basically, commercials, these are people, like I was telling you, I told you who they are, but they comprise the biggest side of the market. So believe it or not, the commercial side that reports to the CFTC, they're huge, right? Look at the positions that they have compared to non-commercials, right? We have over a million, almost a million positions, um, almost a million contracts. These are full contracts, $100,000 a piece, and there's almost a million of them. Okay, by commercials. Uh, and that's the long and short side. If you look at the euro non-commercials, you have um over 300,000 sum of contracts, but it's not a million, right? So the biggest side of the market is commercial. Okay, that's the biggest side of the market. And this is a this was a huge game changer, I feel like, for us when we kind of discovered that and worked on that. Because when you look at the shift on the scanner, the weekly shift is basically all about the commercial, right? Like what's commercial doing? Or if they going up or they going down? And whatever they choose to do will ultimately um, for the week will send a ripple effect into the market. So we use the shift in COT data week to week. So if there's 100 and let's say there's 600,000 contracts short on commercials last week, and then this week there's 610,000 contracts short. Well, that means the commercial's shifting to the short side even more, and so you might actually look for a sell on the euro, right? If you see that, that's an example of what I'm giving you, right? So that's the shift. Okay, now we really do want to focus on non-commercials for other things, and let me explain. So non-commercials, again, these are the institutions that most closely align with your goals and with my goals. What are our goals in the market? We come here to pull money and funds out of this market that we can subsequently put in our bank accounts and use for our benefit and for the things that we want to purchase, right? That's the goal of our trading style. Obviously, you might love trading, but the whole point of trading is to in the end, the bottom line is putting more dollars in your bank account, right? Okay. So non-commercials, right? So these guys, we want to follow them. Now, we don't want to follow them necessarily on a week-to-week basis because, again, their movements don't really affect the market on a week-to-week basis. However, their movements over a longer period of time really matters. In fact, one of the things I'm doing right now, if you're curious to know about what I'm doing, is I'm actually back testing. I'm hoping this becomes a big thing that we maybe improves our trading in 2024, is looking at the shift in non-commercials over several weeks, not just like a week or so, like we do with commercials. But what does it do in 5 or 10 weeks? And if it's significant, that might be something to look at going forward with in regards to taking trades, right? So so yeah, their shift over time matters, and that's something that I'm currently back testing. So what do we already do with non-commercials? So non-commercials, again, when they have a long position, like with the euro here, generally you're going to be buying the euro. Okay, if right now you can definitely tell, they definitely are more long than short. So obviously that's the general idea, but there's more logic to it. We're going to get into that in just a moment. Now, if you search for something else, I don't know, let's search like the Canadian dollar. Okay. Canadian dollar is the opposite, right? You have almost 78,000 contracts short to almost 20,000 contracts long, right? So obviously in this scenario with the Canadian dollar, we probably would be looking to go short in general, right? There's a little bit more logic to it, but that's the general concept. Okay. Also, just notice how much bigger commercial is. Commercial all, by the way, commercial usually does the opposite of non-commercials, just so you know. These guys actually provide a market for each other. So non-commercial could not survive without commercial, and commercial could not survive without non-commercial. Basically, these are the guys who trade against each other. And it works because they both have different goals in mind, right? So one over here is just interested in making a profit, and these guys are interested in just operating and stabilizing their business, right? I mean, let's put it this, everybody's all about making profits, right? It's just that these guys don't use the futures world or Forex world to to for that purpose. It is a function of their business. It's not the main reason why they trade though, right? So very important distinction. Whereas non-commercials, the whole reason why they trade, their reason to be is to make money, right? There's the only reason why they're in business. They don't produce products, they don't produce services, nothing like that. They just trade. That's all they do.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
By the way, I just want to share a quick thought on that now that I'm thinking about that. Something that I discovered a while ago as a trader, because as a trader, I enjoy trading. I love looking at the charts. It will help you a lot if you can do or have other things. This is for me personally. If you're already doing this, great, but I'm just going to share this with you. If you can have another hobby that actually creates something where you use your hands or where you like do other things outside of trading, that will actually help you trade better. Here's why. Because we need that like visual satisfaction. Like we need to be able to do something with our hands and be like, see that? I spent 3 hours this afternoon making this thing or whatever, right? Or, that kind of thing. If you have that kind of hobby in addition to trading, you'll trade better. You'll be a lot happier with trading. You'll be more excited to sit at your computer. It won't feel like a prison sentence or something like that. Because I have been there. I have felt that with trading because you can it's easy to sit at the charts for hours and hours and hours on end. And so with trading, it's kind of a unique thing. It hasn't been around in the way that we have it for a long time. It's kind of a luxury, actually, if you think about it, to be able to trade. So having a balance where you can do other things is helpful. Anyway, I just brought that up because it reminded me of non-commercials, because these guys, like I said, they don't produce anything other than just trade and make more liquidity in the market. right? So make yourself useful outside of trading and you'll actually trade better. Another thing that you can do this time of year is find ways to serve other people and find ways to give to others. Especially at this time of year, right? During the holiday season, it's a good time to do that. Better than ever. And you'll trade better, you'll be more focused. And anyway, that's just my little piece of advice that I'm just going to throw in the middle of the webinar there. Might help you guys out. If you're already doing that, then awesome. I'm just sharing that with you because if you feel like trading sometimes becomes this thing that you almost don't like anymore, even though you love it, it maybe it's time for a break for a few hours or even a day. Just take a day off. I know guys that actually have a day in the middle of the week where they just don't trade, just because they need that little break in between. They do something totally different. So it might be a smart thing to do. Okay, cool. So anyway, so moving on. So how else do we use non-commercial data? Um, um, let's see. Oh, I'm just gonna read this. Bill says, I have a full-time job plus play bass in a rock band. Don't need any more distractions from trading. Yes. Yes, sometimes that's good. Maybe I'm talking more to myself because that's kind of all I do. I trade. I mean, I have some other things I do, but I definitely spend a lot of time on the charts, that's for sure, and working with trading and stuff like that. So maybe I'm preaching to the choir. Probably. Anyway, okay, so how else do we use non-commercials? So I told you guys we use it to find uh we want to follow what they're doing. So just want to make sure it's very clear for anybody watching this in the recording or here live. This is what we do. Like you got to follow non-commercials. These guys know what they're doing. Now, I want to make it very clear as well, some context with the COT report. The COT report, its best use is on a broader scale. So like if you're looking for a scalp trade, the COT report really isn't going to be your best friend. Okay. If you want to be a scalper, if that is you, and you want to be that person that gets up for an hour or 2 hours every morning and just sits at the screen and trades, that's great. There's nothing wrong with that. I don't want to demise that at all. It's just that your style of trading is not going to work with the COT report. So please make sure that that's clear before embarking on the COT report. Now, let me share my take on this though. Again, very wise mentor of mine told me the institutions will lead you to wealth, right? So my take on this is, well, what are they doing? How do they trade? Oh, they build positions, they accumulate, they hold trades over a long period of time. If you think about how does the Forex market even move, right? Like today we saw some huge movements, right? After the FOMC. Did you guys also notice that pretty much every long-term signal, everything went in the direction of the long-term signal during FOMC? We're going to talk about that later too, but just on a side note, did anybody notice that every single signal from the scanner that had a long-term signal, strong buy or strong sell, I think minus one of them, there was like 10 options, 9 or 10 trades signals went in the direction of that. And who was in charge of the markets today? Was it mostly retail or was it mostly these non-commercial big banks? I would argue that these guys were in control of the markets today with Jerome Powell and company, right? Those guys were in charge, and that's the direction they ultimately took the markets, right? Anyway, just an interesting thing I wanted to share with you guys. Okay, so now talk about let's bring this all together. So let's actually go over. Let me actually pull up the COT report journal, and let's also pull up the scanner. Um, every week I collect all the data on the COT report journal over here. I collect non-commercial for everything. I collect commercial for everything that we look at. Currencies, we look at uh, uh, CFDs and indices. I actually have the non-reportables. I have the dealers over here. I have asset managers and leverage funds as well. So every single data point I collect here in the COT report journal. And then we use this for the scanner. We use this for delivering other signals and trade ideas. It's all included in here. Okay. All right. So let's direct our attention to, let me actually take you over here. So I put together this not too long ago. I'm not sure when I did it, but not too long ago. So this is the percent long and percent short of the non-commercials. Okay. And who are those guys again? These are the guys we want to follow, right? Because these guys are the ones that really make the big moves in the markets. And these are the guys that that have the same goals aligned with us, and we get a really clear picture on what they're doing. So I've actually put this together in a really nice format that's not included in the COT report, because the COT report is just a collection of data, but then you have to do something with it, right? So I've made all sorts of like calculations on how to deliver this data to you guys to help you trade better, to help me trade better, and all of us. Um, And this is actually one of the most important things right here that I wanted to show you. So this is really nice because it puts it in an expression as or as a percentage. So we have here all the currencies. And again, for those that don't know, it's not done in currency pairs. It's done in individual currencies. Okay, why is this? Because the CFTC doesn't monitor Forex. Well they do, but it's Forex is a decentralized network of 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 a market, right? So like every broker in the world basically creates their own market for Forex. Futures is localized to an exchange, so it's done through, like I said, the CME, and everything is there, right? So because of that, um, because you have a because of the futures market, they don't necessarily trade in Forex pairs. It's done in individual currencies. So you have the Aussie futures, you have the CAD futures, Franc futures, Euro futures, and so on. So we have to break down individual currencies, and that's how we're able to get information on what to do with all the other pairs. Okay. So let's break this down. So right now, what are the big observations? Well, right now the euro and the dollar are some of the most bought up currencies. So let's actually highlight them. So we got a really long dollar and we've got a really long euro right now. Okay. And then what are some really weak currencies? Well, we've got a really weak franc, right? We have a really weak Canadian dollar, and I would say weak Aussie, weak Japanese yen. And those are maybe a weak Kiwi base. Yeah, it's almost there. Weak Kiwi. Yeah. And then everything else is just kind of in between. You do have somewhat bought up silver, somewhat bought up gold. Yeah. But I'm just gonna focus on the currencies for now. And then we'll talk about some of the others later. So, okay, so this is important because this has to do with the crowded market logic. Okay, so you know how I just told you guys, I'm going to really confuse you for just a second. I'm going to clear up the confusion though. But you know how I told you we need to follow these guys? That is true. However, when these guys get really super loaded into a position, you no longer want to follow them because the opportunity has exceeded. Like there's no more, like the move's already happened, basically. Um, So when these guys get into a really big position, for example, the dollar against the franc right now is really big, and I actually have this expressed right here. Yeah, it's 65%. That's the biggest one we have right now. So what this means is there's a really big long position on the USD franc right now. Okay, another one would be like the Euro franc, really big long position here. Um, yeah, anything else that's close to that? Like, yeah, the USD yen. Yeah, I'll highlight that one. That's also really long. Um, Euro franc, I'll highlight that. So these are really big positions, basically. That's what this is trying to say. Okay. So for a while, these pairs have been going up. Like, for example, if you pull up the dollar yen, let's take a look at this. The dollar yen's for a long time. Like when you look at a higher time frame, let's actually go up to a higher time frame. This is a 4 hour chart. For a long time, the dollar yen was going up and up and up and up and up and up, right? For quite some time. Um, this goes all the way back, made a pivot low right here in July of this year on the dollar yen. And then you have this earlier this year on March, it pivot down here. And then I guess it made this pivot down here in January. So pretty much all year, dollar yen's just been going up and up and up and up and up. Now, finally, these banks have gotten into themselves into a really big position and they're trying to get themselves out of this position. Okay. So we call this a crowded market. Okay. That's what a crowded market is. So when they become crowded, basically what this means is they can no longer, like you can't get any more crowded, basically. Well, you could, but not a lot more. Because once you get to 100% of something, um, and there is no, you can't go over that. Once you reach 100% of something, you can't go over 100%. Okay. Um, like if a gallon holds a gallon of milk, when you get to almost full of a gallon, you can't put more milk in there. I mean, you might be able to put a little bit more in, but you can't put much more in. Okay, that's the concept. So I like to think of a rubber band or an accordion. If you pull your accordion out and start playing music and you stretch it out, you can't bring your accordion out anymore. What's the only thing left you can do with your accordion? You have to bring it back, right? It's kind of like what goes up must come down type of thing, right? That's another example of this. Yeah, there's actually a ton of examples. I've never used the gallon of milk one. I like that one. But yeah, that's the concept is if you have 2 gallons of milk, one's your long side, one's your short side. If both get filled up and there's not much more room left, then you have no choice but to empty them, right? Yep, exactly. The market breathes in and out. That's another great example. You guys are awesome. This is awesome. Yeah, so that's exactly what's going on. So we want to follow non-commercials until they become crowded. Okay. So when they become crowded, I've actually learned, and this is something that I've been really studying. I actually know several companies that trade this way, including a hedge fund that trades with the COT report. And they actually, a representative at this company told me that this is their preferred way of using the COT report. So it was really cool for me to have this conversation because over the phone he basically told me like, hey, this is kind of what we're doing, and he said our favorite trade is when the non-commercials become crowded. And I said, really? I didn't know that. He said, yeah, that's our favorite trade. I'm like, okay, all right, tell me more, right? Like, tell me more. What else do you guys know? So, and I'm like, okay, well, what's your time frame on these? And he's like, well, it kind of depends on how long they stay crowded, but and they have some other things that they do, but the overall concept is when they become stretched out, they have to excel the other way, kind of like Lee was saying right there, right? So what has been happening now with the dollar yen? Well, even today we took a massive load off, right? Massive load off. Okay, so that's the crowded market concept in effect. And no surprise that they did it during a news event, right? We had some news today with FOMC. They mentioned that you're going to see some rate cuts. They didn't lower rates, but 2024 might see some lower rates. So mortgage rates dropped today. Even though the Fed didn't lower rates, the um, the bond market's pricing that in already. So that's why mortgage rates dropped today. Um, Bonds went up in value, and that's because of and that, like I said, that is because of the Jerome Powell and what they're saying that they're going to do now. Basically, they told us that we're not going to, this is the pivot. This is the pivot. We're not going higher than this. And the market took that as really good news. Crypto saw that as good news. The um, stock market saw it as good news. And the banks were able to, and the banks saw that and they're like, okay, yeah, we're getting rid of the dollar yen. Like, why do we don't want dollars anymore because, hey, the dollar is becoming devalued when you lower rates or anticipate lowering rates. So that's why you saw the dollar tank today. And like I said, this is this concept in action right here. So just crowded market in action. Okay. Okay. What else do I want to mention with that? So when you go to the scanner and you see when you actually filter by the crowded market indicator over here, it does it out of five out of 5 stars. Okay, so anything that has like these ones have 1 out of 5 stars. That means the market's not crowded. That means the banks don't really have a huge position on these. Okay, when you see 2 out of 5 stars, it's like, okay, the banks are starting to accumulate a position, um, or they're not quite certain what they want to do yet. When you see 3 out of 3 stars, same thing. Even 4 out of 4 stars is, I'd say, is similar. Um, but when you get that 5 out of 5, to me, that's exactly what you want to see because 5 out of 5 is just saying, hey, look, these guys are so crowded, they have to get out at some point. And that may have already, this is not going to tell you if it's already started or hasn't started yet. It's just telling you that, hey, at the current moment, per the last COT report publication, they are indeed crowded. Okay, that's what that's trying to tell you. Um, So I usually give this a little bit more value when it does get 5 out of 5, and the long-term signal does become a little bit more powerful when you get 5 out of 5. So pretty much anything 5 out of 5 stars will indeed be a long-term strong buy or strong sell. Okay. So how could somebody use this? How could somebody use this in their trading? Well, if you're okay with being a swing trader, like a true swing trader, then the long-term signal would make a lot of sense if you're willing to hold trades for a couple of weeks at a time, maybe even several weeks at a time, right? I actually started a prop firm challenge recently. It's just another 50K prop firm challenge. And last I checked, and I'll check it again, but last I checked, I was up. Yeah. So I'm up over $1,000 today on a 50K account, which I think is pretty awesome. And that's just from the long-term signals. That's just the crowded market signals. I was down on that account this morning. I was down a couple $100 just on the trades I had taken. And then poof, just like that through that news, like every long-term signal pretty much worked out. Um, okay, but again, it's not going to be one of those things where it just happens every day. So I want to make it super clear, like when you're trading like Forex and when you're trading crowded market, um, these moves usually will happen like all at once, very, very quickly. Okay, so most of Forex trading during the week is kind of quiet generally. And then once or twice a week, you'll get these massive, massive, massive moves. Okay. Um, and so I was thinking about it, I'm like, well, that's kind of how the banks trade this stuff too, is they kind of just accumulate the build positions, and then when the big moves happen, they take part of that big move. Um, I want to show you guys something that I did on the Kiwi dollar actually, and I'll even show you the dollar yen. So like this week, let's actually show you this. So when I trade crowded market, one of the things that I did is, like, for example, on Monday, the signal was to sell the dollar yen. Actually, it's always been to sell the dollar yen per the, I'm not sure about the other indicators. Let's see, where's the dollar yen on here? Is this is actually a neutral signal. And it's partly because sentiment has this at a buy, and the long term has this at a sell. So it was just a neutral signal. Now, um, even so, even with that though, um, it's interesting because starting Monday, this actually went up. So it went up against the crowded market signal. And if you're a scalper, you might say, hey, that's going against the crowded market signal. Well, again, it's not meant to be traded as a scalp trade. It's really not even meant to be traded as an overnight trade. It's more of a, um, yeah, like I said, it's a true swing trade, right? And if you think about it also this week, here's the start of the week. This market basically did nothing all week when relative to what just happened, right? Relative to the last several hours, right? And so that's the nature of Forex is it moves that way. So one of the things that I did in this account, like I said, this particular account is only for crowded market signals. Okay. And I mentioned this last week, and I want to show you guys how I do this. So what I do is I start the week with this prop firm challenge. What I do is I start the week with the original like sell. So if I'm just going to sell at market, then I sell because that's the signal as far as long term goes. And then what I do is I actually don't use now this again, disclaimer on this, I'm not using a stop loss for this particular strategy. Partly because I have my stop losses really well, I don't have stop loss. My what's it called? My lot size is really, really small, like generally pretty small. I just used a just 0.04 contracts, so 4 micros per trade. Yeah, so the prop firm I'm using doesn't require a stop loss. Yeah. And you could if you needed to use a prop firm that required a stop loss, then you could just put in an irrelevant, like you could put in a stop loss, but just put it far away type of thing. You could do that if you wanted to. But again, let me explain what we're doing. Then it will make more sense why this works. Okay. Like why I'm okay doing this. Now, again, I'm only doing this with money I'm willing to lose. I'm actually happy to do it in a prop firm account because again, the worst thing that could happen is I fail my prop firm challenge, which obviously no one wants to have happen, but it's money I'm willing to risk to make this happen. So basically, what I do with these long-term signals is I prepare for these things to go in my favor big time. So what I do is every night I come in here and I'll place up to 3 trades, but they're going to be stop orders. So I'm not going to place a trade if it goes against me. I never place a trade when it goes against me. I'm going to repeat that again because it's so important. Never place a trade when it goes against you. Okay. This is like so key to making this work, right? Like, just got to make sure it's very, very clear. So I'll place the regular market order at the beginning of the week. And then naturally, like this week, at the start of the week, this thing went against me right here. So since it went against me on Monday, I'm down on this trade at this point. So I'm down on this guy right here. And these trades are still down here. But here's the thing. At the next day, I come in and I readjust these stop orders. So I'll always have up to 3 trades, and there'll be stop orders. And then what happens is I'll come in here and I'll say, okay, great. This thing went against me. Now I got to put in my new orders for tonight. So I'll readjust my stop orders. So this is my average daily range on the dollar yen is 94 pips. So half of that is like what, 47 pips, 48, something like that, right? We'll just say 47. Then what I'll do is I'll say, okay, 47 pips below this price is about right here. So I'm going to move one of my entries about 47 pips below. And then about 47 pips below that, I'll have my next entry, which should be about right here-ish. Something like that. So I have this order that's already executed that I'm in. I'm only in one order, just so everybody knows. Up to this point, I'm only in one trade. Okay. Then I have a sell stop right here ready to go. And I have a sell stop right here ready to go. Then I let this continue. So this thing could continue up. Let's say it continues, it just skyrockets to the upside. That's not fun because I'm short, but I'm only short one trade. Okay. Meanwhile, I have other trades that are going in my favor, and I have up to 3 or 4 trades that are activating in my direction. And this one is just one that is going against me, right? See where we're going with this? Then as this, but we're following the crowded market. We know the banks eventually want to sell. We're just waiting for their move. Okay, so we're waiting for that move to happen. And then as this thing progresses, you're like, okay, here's another day. Another day goes along and it's still, let's say it's still going against you. Okay, this trade down here is fixed. You cannot move this sell right here. That's a market order. In fact, I'm going to label this. This is a market sell right here. And I need to make this a lot smaller. Okay, so this is a market sell. Now this is a new day, and I'm still in just one trade, right? And now I'm going to readjust. And again, the average daily range is about like 94 pips. So I'm going to make my half an average daily range about half that. So we'll say like 45, 47 pips. So I'm going to readjust this sell stop, move this up just a little bit. See what I'm doing? And then 47 pips below that is my next trade. So I'll bring that about just above this old trade. That's another sell stop right there. So now I have, again, I'm just doing up to 3 trades. I won't go over that. Actually, I've done up to 4. I haven't done over 4 though. But how many trades am I in at this point? Market's gone up against us. It's gone against us for the week so far. How many trades am I in? One trade, exactly. Now, here's Tuesday, right? What happens Tuesday? Okay, now all this just happened, right? So now I'm in 3 now because I just had one sell stop up here trigger, another sell stop just trigger, and then my original market sell. Now I'm in 3. So I'm a little heavier now. Okay, I'm a little bit heavier. And I usually don't add to this again unless we were to have a major move to the upside. Let's say that happened. Hopefully that doesn't happen. But if it were to have happened, then the game plan would be to place another sell stop. But you're not doing what retail traders do like I used to do, where you would just add another sell as it goes up. As it goes up, you're losing more and more money. You're not trying to bleed yourself. Um, you're not trying to get yourself, you're not trying to bleed out, right? On that type of move, because you will bleed out of your account if you do that type of trading, which I am guilty of so many times over. And I'm not saying that you're doing that. I'm just saying that because that is the danger of that style, because I've been doing this for 11 years and I've blown a lot of accounts doing that type of style. And you don't want to get yourself into that. It's tempting to want to add into losing trades um, a- as they're losing, because there's this thing in our mind that says, hey, if I do this, then and if this turns around, then I could really recover this very quickly. I know that feeling because I've been there so many times. And sometimes it does. But the problem is you don't know that. And so if it does end up going against you, the losses multiply and compound, and it just gets terrible, and that's how you blow up, right? So you don't want that to happen anyway. So that would be the game plan from there if that were to happen. Now that hasn't happened. So where are we at right here? Well, a new day's come. Let's say it's Wednesday. Now we're up. I guess this is Tuesday still. Um, I'm not doing anything because now we're profitable because we've got the original trade that's profitable, and a few other sell stops. If you wanted to, you could actually get rid of your market sell, and take a few profits on that so that you're not as big anymore. And you could just leave the two sell stops. That's totally fine. And now this thing does its thing, does its thing. Um, and you're still in profit. You're still in profit. Comes up a little bit, maybe flirts with break even for a moment. And then obviously you had this big move, and here we are. Okay. That's Okay, so that's exactly what you're looking for there. And actually, oh, it's good to see you, Mohammed. Yes, so looks like NZD dollar is coming along well. That's exactly what I did with the NZD dollar this week. I mentioned that this morning that I had some long positions over here, and it's the same exact thing, right? So let me explain what happened with this trade, my progression with this trade, and this new prop firm challenge that I'm doing. Um, Again, this style, if you want to try this out, I said this last week and I'm going to say it again. Please do it in a demo account and pass, the equivalent of a prop firm challenge first in a demo account before you just go out into a live account. Unless it's like, I don't know, if you already felt confident, I guess you could do a prop firm challenge and then see if it worked out, but I just don't recommend that. I would totally test it out, make sure that you become proficient at it because again, you don't have a stop loss on this. If it made you feel better, I guess you could use a stop loss, but then just have it, a couple average daily ranges away type of thing, so it's kind of bigger. Um, that still doesn't negate the fact that you have to use a very small contract. So if it made you feel better, I think you could put in a stop loss, but it would just be a couple average daily ranges away. Um, that Consider that if you wanted to do that. I think that's not a bad idea. So let me show you how this works. So on this one was actually kind of rough for me. I ended up putting in 4 different trades on this one. So I started the week right here. Why did I buy this again? Again, it's all about the crowded market signal, right? So the New Zealand dollar right now is New Zealand dollar right here is a long-term strong buy. So the banks are what? The banks have a really big short position on the New Zealand dollar, and they're trying to get rid of the short position. So what is that going to do to the market if the banks have to close a short? It's going to send the market up because anytime the banks close sells, it's that means they have to buy. So if you have to buy and you're a big corporation and bank and you own all these positions, it's going to send the market higher, right? So that's why the New Zealand dollar is in crowded market stage, is because the banks are trying to find whatever way they can to send this market higher. Well, they actually don't want to send it higher necessarily. They're just trying to exit their short. And in the process of exiting the short, it's just sending the market through the roof, right? That's what's happening right now. Again, these types of moves are not going to happen every single day, but they are going to happen on the swing style. Like if you're like the move that we saw today, I'm sure a lot of banks were waiting for that move over the last couple of weeks on the New Zealand dollar, and it just happened today. Conveniently, I think it does happen on a lot of news events, but that's the move that they were trying to get to, and it finally happened. Okay, so so let me explain how my progression with this trade this week. So I took a trade here on the New Zealand dollar, and again, I just took my buy market at the beginning of the week, and I'm only in one trade to start. This is just to start my week. Okay, I know I want to buy this as my swing trade. Okay, I'm in at buy market right here at the beginning of the week. And then what do? I place two sell stops above this and the half an average daily range difference between the two. So that's 54 pips is the average daily range. So the half an average would be like 27 pips, right? So 27 pips above where I started the week, I put a trade in. So about right here, I put in a sell stop right there. Okay. So, or excuse me, a buy stop. No, sorry, I said sell stop. No, I meant buy stop. Buy stop. You got it. Yep. Put in a buy stop right here. And then 27 pips above that, I have my last order, which would put me about right here. Honestly, I think I got triggered in, guys. So I'm going to give you this and I'm going to show you the worst case scenario because I think the worst case scenario actually hit me yesterday. I actually got triggered in on this buy stop right here. So I had another order trigger. So this kind of stinks. I hate it when this happens, but it does happen. So I actually got triggered in all three of these. At one point, it feels pretty good because you're like, I'm down. I got to buy here. I got to buy here and I got to buy here. And that's pretty awesome. But then it pulled back and then it came down to here. So what I ended up doing is I placed an extra trade, not another buy like at market. No, what I did was I'm prepared for this to go against me. If it does go against me, I have a small enough position on all three that it's not going to break the bank um to an incredible degree if that happens, but it would not be fun, right? So what I did is I placed with the market at the end of the day yesterday was right here. Let's see, today this is Wednesday. Let's see. So Tuesday, the market was right here. Oh, I guess no, this is the start. This is last night. So last night was right here. So 27 pips above this, I placed another trade. So 27 pips would put me about right there. So I add another buy stop about right there. This one has not triggered. This would be my fourth trade. Buy stop. And then that's ready to go. So I'm in three trades, but I have another one ready to go. And if the market breaks up, then I'll get into another position. And then it's only if the market breaks up that I'll do this. So this was one of my most profitable trades this week. And it's funny because at one point, this is actually one of my more negative trades because I was down on all three of these at one point. And then when it finally came back up through that news event, just everything just went right. Just everything, like every single trade was profitable at that point. I did close out of one of these trades. I think I closed out of this guy just because he's not priced as well. And so but I still took profits on it, which was amazing. Still took profits on it. So this is like I said, just another example of what I did, and I did this with a lot of these. Now let me show you one that pretty much just worked out right away. I think it was the USD CAD. Was that one that just worked out right away this week? Um, with these ones, it's pretty simple. Like, so yeah, here's the USD CAD. We've been looking to short this all week, and here we are, right? So at the beginning of the week, I had a sell market right here. Okay. And and then the average daily range on the USD CAD is 71. So we'll just say 35 pips is the distance that I place between these two. So I have a sell market at the beginning of the week right here, right there. And then 35 pips below that, right here, I have another sell stop. And then 35 pips below that, I have another sell stop about right there. Another sell stop. Okay, so with this one, what I ended up doing was, like I said, same concept. I'm just beginning of the week, got into my sell, was good and hunky dory at first, got into a second one, then it went against me. Again, I did not add to it up here. Obviously, in hindsight, would have been nice to have added up there, but we don't know that. Like, what if this thing just goes ripping against us? What if that thing just goes, boom, just to the upside, which it could do? It could have very well done that. We have to protect the account, right? So we don't add to the position as it goes against us. We add when it goes in our favor. Okay. I can't remember if I did another trade. I'm going to say I didn't, but if I did, it would have been nice. Um, I would have added another sell stop here. That would have been nice, but I'm just going to say I did this. So I just let this one sit pretty much all week. I just left all three sell stops just ready to go. And then obviously this most recent one triggered very quickly, and we are just on our way. This thing is sinking like a ship right now. Um, yeah. So that is the long-term signal. We'll see how far that goes. I don't know if there's demand. I mean, it looks like there's demand down here. Um, but yeah, so that could actually keep going on that USD CAD. Uh, another, um, we could see that go another 37 pips or so. We'll see. But yeah, there it goes. Really great question. So Lee says, how do you know when the crowded market is over and finally get into the position? That's a great question. So this scanner will actually already tell you when that's going to happen. Um, so we've already had a couple of trades pull out of here. The scanner, I'm not sure what the threshold is, but I've set it to a certain threshold. So the scanner already knows that, hey, if we get to that threshold, it's time to start to think about not putting this in crowded market stage anymore. Um, I would also monitor, I mean, I'll share this with you guys. I'll share this with you guys together, but I would also monitor the um, this right here. So this shows you the big differences in currencies. So um, so yeah, these are the big ones: USD franc, USD yen, Euro franc. Um, What's one that's 4 out of 5 stars? Let me show you what that looks like. So one that's 4 out of 5 stars is like this. Um, Here, let's filter this way. The Euro Kiwi, for example, is 4 out of 5 stars. Where is that in relation to this? So the Euro against the New Zealand, it's at 44. So 44, so a difference in 40 as a difference of 44 is not big enough to be in crowded market stage, but something like this one where it's up 59 is crowded market. And basically how I'm figuring this out is um I take the the base currency long positions minus the quote currency long positions. That's how I figure that out as a percentage. And then that tells me if it's crowded or not. And then from there, it goes into the scanner and tells you if it's crowded or not. So, all right, guys, any other questions? Wow, I spent a lot of time on that. Hopefully this was very helpful though. Going over this. So this is a very powerful tool. If you guys want to try trading this way as a swing trader, I think you can even I'm literally doing this in a prop firm account so that I can show you guys like, hey, I passed a prop firm challenge, literally doing this, just taking crowded market trades, um, using that risk management style. Um, so I'll keep you guys posted on how that prop firm challenge goes as well throughout. So, all right, guys. Well, I'm going to go ahead and wrap up. Just a little update. Tomorrow morning is our last class for the week. I'm not hosting a Friday call, just so everybody is aware. We will be doing updates on Friday and signal alerts, but no call on Friday. So tomorrow's the last live trading call, just an FYI. But appreciate your attendance today, guys. Thank you for coming. Enjoy the rest of your evening, and we'll see you guys in the next call.